Hello, my name is Steve Bigelow with the Candlestick Forum. The markets are still in an indecisive nature as far as the trending. As we can see in the Dow last week, when we had the shooting star signal confirmed, it told us we were in a downtrend. However, you can see in the Dow has not been selling off, it's been drifting back with bullish signals. And today we saw not only was it a strong signal, but it actually closed back up above the T line. This doesn't necessarily mean the downtrend is over, but it gives us more of a visual analysis that the downtrend is not a strong selling downtrend, just merely oscillation. We can see that the stronger selling is coming over here in the NASDAQ, where once it did the bearish kicker signal and then bounced back up, but failed at the 50 and sold off again, that even though it traded above where it opened today and slightly positive on the day, stochastic's still heading down. There isn't any major reversal signal. So the analysis is simple. There's going to be some sectors that are going to trade positive and other sectors that are going to be trading lower. Fortunately for candlestick analysis, that allows us to identify which signals and patterns are occurring so that we know where the strong charts are. And this is a major advantage of having a chat room where everybody's looking for the same patterns. Today, our chat room recognized that Ruby was trading stronger, creating a J-hook pattern. This has a high probability of wave 1 and wave 3 being the same magnitude. That same analysis was also identified by people in the chat room on CYH, a J-hook pattern after a fry pan bottom. This is what we call the classic pattern. Fry pan bottom has a strong price breakout. A J-hook pattern has a strong price breakout or a strong price move as a prerequisite for it pulling back. And notice where it pulled back to. The most convincing and compelling trend indicator that you can use, the T line, the 8 exponential moving average. So this T line acting as a natural support and resistance level makes it much more clear that a J-hook pattern was setting up. Now what do we expect from here? The same magnitude move as this move right here. So the candlestick signals provide us with a much easier and a much more accurate assessment of what's going on in investor sentiment. We shorted Viacom because there was a hanging man signal in the overbought area, one of your 12 major signals, followed by a gap down, which is the exact confirmation you want to see that there's been a reversal. The fact that it closed below the T line told us we could start shorting on any weakness. And now we're down here at the 50-day moving average, doing a doji. What's a doji tell us? Indecision between the bulls and the bears. But stochastics are still heading down. However, look where the indecision is occurring. Right smack dab on the 50. What does that do for closing out or taking profits? Well, this is a good place to take off half the position. If it opens positive tomorrow, you close out the rest of the position. If it opens lower, telling us the 50-day moving average is not acting as a support level, which would be the doji rule, meaning the price will usually move in the direction of how they open after a doji. So if it opens lower, it's still heading lower. We're still making profits on our short position on a less exposed trade. Now getting into the oversold area. Same scenario on when we shorted Road last week. There was your shooting star followed by a gap down. The gap down took you below not only the T line, but the 50 and is in a strong downtrend. However, today we had a doji Harami, or I'm sorry, a doji hammer in the oversold area. That gap down was a good indication that the Japanese rice traders kind of alluded to that where do most people sell? They panic sell at the bottom. What was the trading strategy? a doji in the oversold area gapping down, the Japanese rice traders start looking for buying. So you take off half the position. If it trades lower, you're still short. If it opens positive, you close out the rest of the position. I often state this is not rocket science. This is just the reoccurring indications that human nature produces for us in candlestick graphics or the candlestick signals. Oops, that wasn't supposed to be there. So again, tomorrow will be important to see how they open the market. What do we want to see from a bullish candlestick signal? Bullish confirmation. If they open the markets lower tomorrow, which we'll be able to see in the pre-market futures, that tells us our downtrend is in progress. If it opens positive, it tells us we might have buying starting in the Dow, giving us a J-hook pattern. That will instigate looking at sectors that are oriented toward the Dow and be long in those and maybe still short in the NASDAQ stocks. Join us this weekend, March 27th, 28th, for a 2-day comprehensive training on how to use candlestick signals correctly. This is not anything difficult. You don't have to be a sophisticated technical analyst. All you have to do is recognize the signals and patterns that the Japanese rice traders have illustrated for the last 400 years that told us when there was changes in investor sentiment. No matter what trading strategy you use, if you apply candlestick signals and patterns to those on your charts to those trades, you're going to see much more clearly when they're working and when they're not working. That'll be it. We'll see you in the chat rooms.